Hello, and welcome to Rocket Fuel, a daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is March 20th, and today's episode is going to cover some Ethereum stuff, some BlackRock stuff, and news of Strarknet airdrop that is coming through potentially very soon. So stay tuned, and let's get started.
10, 9, ignition sequence start, 6.
So first of all, there is this joke that Chris made, and he says that Daily Gwei is off for a couple of days, so Wack needs to pick up the slack. So I am picking up the Wack slack, and I am going to cover a bunch of Ethereum news that's happened that you might not have seen, which is, first of all, this news that broke this afternoon saying Ethereum Foundation is under investigation by a state authority, and then the source was CoinDesk. So let's have a look at what this CoinDesk was saying. CoinDesk is basically saying that Ethereum Foundation faces inquiry from a government. Fortune says SEC investigating ETH. We're going to come back to that second part later, but let's stick with the first part for now. So there was this idea basically on the Ethereum website where there's something called a canary being used, and we're going to talk about that next. But it says that basically there's this confidential inquiry, and that the only way we know about it is that the GitHub comment was removed. So there was a comment on February 26th, which is a couple of weeks, 3-4 weeks ago now, that was removed, and for that reason we know that there's been something that's happened, and we don't know basically what it is, but there's a whole lot of speculation going on. One of that is about the SEC potentially going after ETH as a security, but we're going to talk about that next. Let's first of all talk about what this canary thing is. So here Patches says that I shared this news that there's a state authority apparently investigating Ethereum Foundation. Does anybody know anything about this? And I said here there's some GitHub message that supposedly is showing what's happening, and Patches actually replied by saying that you're editorializing this. Their canary died doesn't mean they're being investigated to me. And let's actually have a look at the canary and what this actually means, and maybe I can explain it to you. So there's this idea that basically says that if you are under investigation from the SEC, what happens is you are not allowed to tell, not just the SEC, but most governmental organizations, you're not allowed to tell anyone that you're under investigation. So if you still want people to know that you're under investigation, what can you do? Well, basically you have a canary, and the idea is that this canary is alive, it's doing fine, it's doing well, and if the canary dies, then there's something gone wrong. And there's basically that the idea is that you are now under some kind of investigation. So how does this work? Well, basically on here there's this GitHub text. There was this text, and it said the Ethereum Foundation has never been contacted by any agency anywhere in the world in a way which requires that contact not be disclosed. And then Ethereum will publicly disclose any sort of inquiry from the government agencies that falls outside of the scope of regular business operations. So this basically, like the tag of this part of their website was called Canary Bird. So this has now been removed. So what this means is that the Ethereum Foundation now cannot say that they've never been contacted by any agency anywhere in the world. So this is basically the gist of what's happened, is that this canary has been removed. So like if there's a literal canary, the canary has died. So by seeing that the canary has died, you can infer that there's been some kind of there's something that's happened to cause it to die. So that is basically the extent of this. So different people were saying that, this is not a big deal. This is just like, it could be anything. Lifteris here says, cool to see the Ethereum Foundation warrant canary working. It was removed in a pull request, meaning that they were contacted by a state authority. Likely explanation is the SEC and their relentless attack on crypto. Of course, that's just Lifteris's own opinion here. Let me actually change the screen so you guys can see it more clearly. He says likely explanation is the SEC and their relentless attack on crypto. Berg is making it fun and interesting for the rest of us as usual. So basically what he's saying is that yeah, so he's just kind of explaining what it is and sharing the the part of the code where it has been removed and it's not there anymore, making it so that they've been contacted with someone. So Lefteris goes on to say, though it's weird, the pull request mentions explicitly they were contacted by someone. The warrant canary is not supposed to explicitly specify a removal. So I might start adding a canary to my Rocket Fuel descriptions on YouTube, where I'll say that, Rocket Fuel, I have never been contacted by anyone in any governmental agency. And one day, if that is removed, then it might be that I've been contacted by a governmental agency. That's just a joke. I don't think anyone's contacting me. So yeah. So here, Scott Johnson kind of got involved with this as well, saying that I have some thoughts on this. I do think this relates to the ETF, along with Coinbase and Binance enforcement actions. The SEC has been in an untenable position for some time with its position on ETH. This, in my opinion, is either A, an attempt to maintain its ambiguity for just a bit longer, or B, the SEC going nuclear option. And then the nuclear option, of course, means that, bringing some kind of enforcement against the Ethereum Foundation. It says, Scott goes on to say, if you needed another reminder exactly why crypto needs a change in SEC leadership and a new admin generally to survive in the US in the medium term, here you go. And then there was a reply saying, Evan was saying, how do you handicap the odds between, scenario A and B? And he says, I continue to think B is the nuclear option is highly unlikely, highly destructive with a ton of collateral damage, but I can't rule it out. So then we just covered that. Other people here, Mike says, it's extremely common for crypto protocol foundations to receive voluntary requests for information from federal and state regulators, and subpoenas are about as sure as the sunrise for a crypto entity. So he's saying that it's not something to read too much into, and the fact that this happened on February 26th and we've not heard anything about it since maybe means that it was nothing. Then Tier 10K released another headline basically saying that the SEC is waging a campaign to classify Ethereum as a security, and this is from Fortune, and they're saying that the Securities and Exchange Commission is waging an energetic legal campaign to classify Ethereum, the second most popular cryptocurrency, as a security according to US companies that have received subpoenas related to an investigation. It says the news delivers a blow to the crypto industry, hopes the agency will approve applications by BlackRock and others for the Ethereum ETF following the SEC's approval of a series of Bitcoin ETFs in January. So I've got a couple of things to say about this, but first of all, I'll let Niraj do the talking, and he says, I'm sorry, but there's no evidence in the Fortune piece. How do the people receiving subpoenas know anything about the scope of an investigation? He says, I think everyone's lost their mind. Yeah, and he says, so there was an earlier version of this tweet where he made a mistake, and this is a person from Coin Center, which is a lobbying group about crypto. So I'm not really sure what the full scope of that comment is, but here Evan replies, with the idea about the SEC going nuclear on Ethereum. He says, if the SEC goes nuclear on Ethereum, I'm confident they will lose. They lost to Ripple, they're losing to Coinbase, they lost to some random shitcoin in Utah, the debt box thing from yesterday. And he says, desperate attempt by a lame duck SEC. Would be a shame if the price just went up anyway. And then what's funny enough is if you have a look at the Ethereum chart, it's really funny the way crypto works sometimes. If you have a look at the 5-minute chart, so here, Ethereum was flirting with like $3,400, and on the news of that, it kind of went down to $3,100, and then people kind of decided it was a nothing burger, and then the price has gone back up to $3,400. So that was a nice little 10% dip for those people who wanted to buy it. Now, I'm putting together a story from a couple of weeks ago or maybe last week, where the CTFC, the head of the CTFC, I think it was talking on a panel and talking about how Ethereum is a commodity and how that has been established for a few years now, and how it's been trading as a commodity on the Chicago Mercantile Exchange, and how the SEC accepted a futures ETF for Ethereum, and all of these point towards it being a commodity. And they actually said, the person said that if the SEC basically tried to change that definition, there was going to be trouble in the court. So it's not just all these other groups that are lining up basically to take shots at the SEC. It's even another governmental agency, the CTFC, which is the commodities regulating body. So there's a whole lot of craziness going on here, and like no one really knows exactly what the SEC is trying to get out of this, or who even might be. It might literally just be like a complete nothing burger, and it might have been, like the French service or something wanting some IP address or something. Who even knows? Like, we don't even know what it could be. But the fact that it's gone there, like, has just led to rampant speculation. And sadly, what the rampant speculation might continue, because the Ethereum Foundation can't or won't come out to say what it's about, and the SEC, of course, is not going to be making any statements about this. So in the meantime, crypto Twitter is just like running loose and wild with their speculation and theories. However, something that is not speculation and theories is this form that was delivered to the SEC, and this is a notice of exempt offering of securities. Now, what is this exactly? Well, let's get into it. Here we see BlackRock has started something called a BlackRock ICS US dollar liquidity fund. It says about this fund, it's a low volatility net asset value short-term money market fund. It's rated by Moody's and Fitch. And then it says the investment objective, the fund seeks to maximize current income consistent with preservation of principal and liquidity through the maintenance of a portfolio of high quality short-term money market instruments. The portfolio invests primarily in the first tier securities, which include commercial paper, certificates of deposit, floating rate notes, time deposits, and fully collateralized repurchase agreements. The investment manager will take into account certain environmental, social, and governance criteria when selecting investments as detailed in the fund's prospectus. So what is this exactly? Like, you might be curious why I'm covering it. Well, here we've got the Wolf Den talked about it. So it says that imagine what we could do with the financial instruments. So this is about a line of newsletter. It's a quote from Larry Fink, BlackRock, the world's most powerful and decorated financial institution. So he says, after the iShares Bitcoin ETF went live, he says, imagine what we could do with all financial institutions. So what he was talking about was tokenization. We've talked about this before, and how tokenization was going to be happening from these huge mega financial instruments. And basically this is what's happening now, is that BlackRock and Securitize on the launch of the BlackRock USD Institutional Digital Liquidity Fund, and this has been launched on Ethereum. So here Evan says this is built on Ethereum, and he says the smart contract, in which they're called Biddle, right? Biddle. So you can see on Etherscan here, the contract is up, and they basically people have been sending them ETH and all sorts of other shit coins and stuff. But I think maybe I'm mistaken. But I saw that someone was someone has sent them tornado cash dusting as well. So here Cowboy Non says, what even is this digital liquidity fund? He says, my brain doesn't understand. And Evan says, this is a tokenized BlackRock money market on Ethereum. So this is what they're doing. They are pushing these products onto Ethereum, $100 million worth that they've put onto Ethereum now, and they're tokenizing it, and that's what's happening. So people here said BlackRock will tokenize every TradFi asset on Ethereum, and meme coins wallets will look like this, and this little toy phone, from a kid, and it plays different sounds of like dogs, cats, frogs, sheep, cows, and pigs. And then here, like, if you know, you know. So a whole bunch of Ethereans are just like really hyped about this news. And Byzantine General here has a little bit of a conspiracy theory that I thought was funny, so I'll share it with you. So he says, we sell all our ETH, sell all of our ETH, tell Gary to drop the ETF FUD, which Gary did basically today, supposedly. Tell Gary to drop the security FUD, which is what's from today. Hit him with the headlines. The plebs will panic sell. We buy up all the coins. Force the SEC to lose every case. Approve the ETF. Thanks for playing. And there's a picture of Larry Fink, of course, of BlackRock. So the idea here is that, this is market manipulation that's happening from these huge mega institutions, and they basically want to buy our Ethereum tokens cheap, and get them on the cheap. Basically, they want to buy them cheaply. So you can take that, with however many pinches of salt as you want. But the idea is that, there's these great games of fun to get you to part with your ETH. Okay, finally to some Rocket Pool news. Sorry about that. Anyway, here we got some news from Mig, and Mig said that we should be able to claim our Strarknet in April. So here there's a link from the Twitter account, the Strarknet Foundation, and they're saying that basically their intention was to pay out to people who were staking on Ethereum pre-merge. And it says pre-merged Ethereum stakers are among the categories eligible for the provisions program. As stakers use various methods to stake their ETH, they were classified differently, and each group's claiming process was determined according to its staking method. The Strarknet Foundation originally intended to distribute Stark token to eligible pooled stakers via the staking protocols through which they staked. However, many staking protocols were unable to distribute their allocated Stark to their stakers due to various considerations. Like for Rocket Pool, they got the addresses wrong. This is to overcome these challenges and to ensure stakers will receive their allocated Stark tokens. We've asked those protocols to send us their list of eligible stakers so that we can handle the distribution process on their behalf. Some of them are already working closely with us to do so. So that, I think, is the key information there. It says fix the issue. Beginning in April, pooled stakers who staked through protocols that have provided us with a list of stakers eligible for provisions will be able to claim their Stark directly through the portal. Note this that this fix focuses only on the distribution method. Amounts are determined by the latest rated data on February 20th. So that the amount, 1,800 Stark tokens for each validator basically should hopefully be coming. And we've been told a few times that the team is kind of working with Strarknet, and I think what's happened is that people from the team put together a list of all the node operators who were operating before the merge, and now that is in the hands of Stark, and they should be providing the airdrop in April. Invis had a comment here saying, TLDR, nothing new, and the team is already doing what they're supposed to do. Oh my god, that's crazy. Holy shit, I'm about to pump. So of course, Invis has a great way of saying things always, but the idea is that there's no new information here. The team is working, as they've told us that they're working, and the hint here is that some of them are already closely working with us to do so. So that reference, in part to Rocket Pool. The new information here is that in the beginning of April, they're expecting people to potentially start getting tokens, and that basically is 10 days away or 11 days away from now, which is, in all honesty, incredibly exciting. So I am totally ready for that. Okay, next I'm going to go over the governance proposals that are open at the moment. So two of the Eigenlayer, the GMC appeal, the PDAO appeal of the GMC's decision, both were voted against by the PDAO. So the PDAO voted in favor of the Eigenlayer research to continue. The first vote was really straightforward, that we should definitely continue with some research at least, and that was 81% to 12% in favor of continuing the research. The second vote about the scope of the research, should we still fund the whole research and implementation, or should we just go up to the research and then maybe they can do another round after that? Well, with this one, it was 50% voting in favor of the GMC and against this appeal, but it was 43% voting in favor of the appeal, basically, and to stop further research. So I think this was fascinating because this was one of the closest votes I've ever seen in Rocket Pool history, and it's really interesting to see what's going to happen next with this. So yeah, congrats on the Eigenlayer bounty being passed. I guess we'll see what is going to come from that next. Okay, next we have this post about based ETH, and I'm going to tell you a little bit about it. So first, Jasper shared this information from Flat Money, saying that there are added incentives for voters on the Wrapped ETH and RETH pool. This is on base, so if you are using those, there's some really nice rewards for you to be earning there. However, Guile here said that nice that you're getting 40% for voting and 40% APR for LPs. You guys know do you guys know you'll be included in the based ETH index together with DivETH as well, right? About 4 million in liquidity on Aerodrome at the moment. So this is the first time that I had heard of this. So basically there's this new basket token coming out with staked tokens in there, staked ETH tokens in there, and they're going to be having 33% of RETH, 33% Coinbase is CBETH, and 33% of Diva's DivETH in there. So this is actually really exciting that Reserve on Coinbase will now let you buy this token that has a basket of staked ETH tokens, and of course RETH is hugely overrepresented on this as well. So that is definitely exciting. And Jasper and myself said, Jasper here said, I did not know about this. This is very cool. And the reserve, I guess, to the people who are making this token, they said, and it will be based. So that's just kind of like the meme that people are saying when they're using things on base right now, that, such and such thing is based. So that's really cool news that we got yesterday. I guess it'll be launching soon. I don't know. If I hear more about that, I'll let you all know. Okay, next I've got news of a new marriage that's taking place in the Discord. So this is something that we've not talked about in a while, basically. But marriages are when someone has ETH but they don't have RPL, and another person has RPL but they don't have ETH. They get together and they make a node where they share the deposits, and then they share the rewards of that as well. So here we have Love Points, who's kind of turned up in the community recently, talking about how he's got many hundreds of ETH, and how he's looking for people to bring RPL into a marriage with them. So Ramana, of course, he came up with the RocketSplit, working with the guys from Long Island Blockchain, and now they got to actually use it. So it's set to the RocketSplit now. So basically, during in the thread yesterday, they were kind of working back and forth, getting everything out, and like kind of discussing the whole process of setting up the node, setting up the withdrawal addresses properly, and getting it all to work. And then this was kind of like literally happening in the open, in public, and like how they were signing it and getting it sent. And then the ETH was going to get staked. And now Ramana said it's my turn to stake the RPL. So they were just getting one validator set up, basically, with the idea that if it all goes smoothly at the next checkpoint, then they can add more validators. The Love Point says we're close. Must be nice having an ENS name for everything, less addresses to copy and paste. So that's fine. And then he says, I'm just getting some RPL to stake for you. And then that was the RPL going to stake. And then first RocketSplit, that's what they were thinking of naming it. And then stake the RPL. And then they were just trying to get it all to work, basically. And then it was all going. Here, Ramana said, I couldn't do the stake RPL with the front end. Might want a debug for that feature. Also, I would have expected to ask me first to approve the RPL for spending by the RocketSplit contract. Did that manually. I'm sorry, I'm so cheap with the gas. He says, I'll just resubmit this one at a higher price. So then attempt number 2, and boom, the staked RPL hits the node, and that's enough for an LEB8. So now it's time to create the mini pool. And he says, now it's all in your hands until claiming or withdrawal time. And then that's what happened there. So the validator was set up. So we have a new marriage. This is with Love Points and Ramana. So congratulations to them. Here we then got news of the validator coming online. You can see on the events channel as well. And then Love Points here came out into trading today, saying that he's got a whole lot more ETH waiting to be staked. He says, I've got 500 plus ETH I'm looking to stake. He says, Ramana and I have entered the first RocketSplit with one LEB8. RocketSplit basically means you supply the RPL and I supply the ETH. Then when we partner, you get the RPL rewards, I get the ETH rewards, and I give you a small percentage of my ETH rewards for providing the RPL liquidity, all automatically dispersed by smart contract. I'm looking for RPL whales, either multiple people with 5 to 10,000 RPL each, or one person with about 20,000 RPL for 500 ETH. He says who wants some RPL yield with small percent on my ETH commissions. We're interested to enter RocketSplit contract. He says we'll start with one LEB8, and once the reward cycle hits 21 days, we'll check the fee, how this fee split all works, and if everyone is happy, then we can scale up with lots of LEB8s. So this is really cool that Love Points is doing this, and it's really exciting that we've got a new whale marriage in the community, because it's been a while since we've had one of those. So about 500 ETH that Love Points is bringing here is about 60 new validators. So, it's not negligible, but it's nice to see that. Okay, next we've got this news from Joe, and he says testing on Rocket, on the smart node stack version 2 has started. So we've got a screenshot here of the command line interface, and he's basically installing the Rocket Pool software on there, and it's showing done, and then there's just showing that this is being installed, and there's some warnings that come up, etc. But it's happening basically. So Invis replies by saying, sir, there are multiple warnings, I think your test has failed. And then Joe says, I see Pearl and I just ignore it, which is what this warning here was in the middle of the screen. Anyway, this was really great from Joe, that testing has begun on the smart node stack version 2. I'm hoping that we'll all get our hands on it in the next few weeks, and hopefully we can test it going into the Houston upgrade. Okay, and then talking about upgrading on the smart node stack, here we have Active Scott and Joe talking, and he says all the things you reported are resolved, and then he's got a link to a pull request, and then he says Fornax and Patches, feel free to leave suggestions on the pull request if you want changes. Whenever you can merge those, I think I've done everything requested per the bounty. Let me know if there's something I've left though. So this was the bounty for the notification for service on the smart node stack. So Joe and Active Scott were kind of talking it through, and I think that's what they're working on right now. So Active Scott was finding some bounties and is working on them to do that. So once I have a more of an update from that, I will definitely let you know. But here Joe says this glory in a meeting at the moment, I can pull and test afterwards. He says thanks chief. So that was a really nice little update from there as well. Next we have this postmortem from Nethermind. So Nethermind, of course, had a client bug in January, and this was 2 weeks after Bisu had their client bug. And at the time, everybody, the Bisu report basically was like, was this an attack on Bisu? And people weren't sure exactly what was happening. And then the Nethermind bug happened 2 weeks later, and everybody was like, wow, was this an attack on Nethermind? And thankfully, there's been no attack since then. But here, Nethermind now have a postmortem, and they say that on January 21st, on Ethereum mainnet, the Nethermind client versions 1.23, 1.24, 1.25, and 1.25.1 processed the valid block as invalid. As a result, all validators using these versions stopped attesting to blocks, leading to a loss of attestation rewards and the incurrence of missed attestation penalties. And yeah, basically what happened is they tried to split the fork the chain, but there wasn't enough to finalize anything like that. So that's what happened. And then there's information here about the cause of the issue. It says a Riva opcode in the smart contract transaction caused an unhandled overflow exception in the code that tried to decode the Riva message. It says this bug was introduced by a pull request to extract Riva messages in order to decode Solidity.8.0. 0.8.0 to a more understandable message for the end user. The pull request was part of the JSON RPC standardization. While passing the revert message, the unhandled overflow exception caused the transaction to fail, consuming all of its gas. As a result, the client produced a different block hash in the rest of the chain and caused the divergence in consensus. So they will figured that out, and they're hoping that it won't happen again. So this is, we cannot stress enough the importance of clients' diversity. We're encouraged by the community's positive response in improving the health of the network. So it says, in light of the situation, we'll be enforcing more requirements on the EVM and consensus touching changes and exercising more due diligence towards them. Additionally, we're committed to improving our response capabilities through the development of internal tools. These tools would help to expedite the identification, analysis, and resolution of potential issues. What's really funny here is that normally if there's any kind of bug or software problem, then what tends to happen is that people leave that software, but after the Nethermind bug, Nethermind's market share actually went up because of people leaving Geth, which of course was the right thing to do. So that was really cool. Okay, next we're going back to the Rocket Pool Discord, and here we've got a message from one of our users, Lilac. And Lilac says, this is potentially too serious a topic for trading, but I'd like to solicit the wisdom of the group. So I got an email from Celsius this morning that's saying I'm an account holder with preference exposure because I withdrew funds within 90 days of the bankruptcy filing, which was April 14th to July 13th, 2022, and that I've been unfairly benefited other account holders' expense. They're offering to settle at 13.75 of the amount I withdrew to avoid further legal action. So here, Lilac says, I opened a loan with Celsius in January of 22, and I repaid and closed the loan in April of 2022. What ended up happening was the 90-day clawback is for people who know that a company might be going bankrupt, and they try to get their funds out, but then under US law, the companies have a right to get funds back from the people who took their funds out within 90 days of bankruptcy. So it's clawback law. And that's what Lilac is getting caught with here. And the sad thing is that it was just 1 day, basically, well, 2 days, I guess, just to be safe. but if it had happened on April 12th instead of April 14th, he wouldn't have been getting this letter and he would have been fine. So he says these are the way he sees his options: either pay just a low 5-figure amount, so like $10,000, or between that and maybe a little bit more, or hire a lawyer to figure out if it's worth it to fight pay, which will probably end up costing most of the settlement offer. So the idea is that basically the lawyers are going to get you, and there's no way to avoid it, and that basically they've got a lot of power in this situation, so it might be best to just settle with them and maybe try to settle for a lower amount potentially, but just settle with them and just deal with it basically. And other people, it seems like, have been caught with similar things as well. So maybe we can set up like a little channel for people who are in this situation and they can give advice to each other. Okay, now we're going to move away from Rocket Pool stuff. So here we are now talking about the Ethereum spot ETF. And this is a new form from Greyscale, who of course, have a trust with ETH. They've got a trust, and they have a lot of ETH in there. And what they want to do is convert that, of course, to a spot ETH ETF. And in their application now, they're also adding a staking component. So this is happening with more and more of the providers now. This says providing the trust with the ability to stake the Ethereum held by the trust and receive consideration in relation thereto for the ultimate benefit of the ETH's shareholders. So this is again another one of these spot ETF filers saying that they want to stake the ETH. Now, the discussion, of course, in the Rocket Pool community yesterday got quite passionate, and people were getting very excited with how all of this is going to be staked with Rocket Pool and how that's the most amazing thing ever. But they're all adding it, and it seems like either all of them are going to use it as a way to bargain with the SEC that, we'll remove the staking thing if you approve the ETF, or as we talked about yesterday, it might just be a way for them to say that, building a case to go against the SEC after a denial. So I'm not really sure which way that's going to go, but it's definitely interesting to see that. Rocknet here definitely put a rein on people's parades with the staking with a Rocket Pool thing, and he says not to rain on anyone's parade. He definitely did. But the ETF sponsor is not the custodian, so Coinbase is not the sponsor. The sponsor is BlackRock, Fidelity, Greyscale, etc. He says it's an interesting language used, though. I'm a bit surprised they didn't just say have the custodian manage the stake. Affiliate of the sponsor, while not mentioning the custodian, leaves open the possibility of creating subsidiaries or using white label staking providers. Could be anything, to be honest. So that was a little bit of then Al30 says that makes me too sad. You pissed on my parade. I would have preferred rain. So yeah, sorry if you were getting your parade lined up for all that stake to come to Rocket Pool. Sadly, it doesn't look like it's going to happen just yet. Okay, next we had some responses to Eric Connor's wanting to increase the gas limit to 40 million Wei, and here he said, what is it, 40 million Wei? One of those. He says today, we're launching an effort to pump up the gas. We covered this on the show yesterday. So here, Tony replied by saying, I'm strongly against raising the gas limit now without appropriate time to thoroughly analyze the situation after 4844. Also, this must come after EIP 7623, if at all. In my opinion, increasing the blob count should have priority. And then Dom says, I think the suggestion above is a modest one while we wait for a fork, including EIP 7623 to ship. After that, we could raise it some more. And then Tony kind of wrote this long post out about how the gas is all formed and how it all works. Yeah, and how it all works and how it all comes together, kind of explaining how the blocks are built and what the sizes of it are, and how we can increase the gas limits later. However, then Tony came back and said, my bad, I should have read it to the end. In this case, having enough time to do more analysis. After having more time to do analysis, I'm supportive of increasing the blob count and/or the gas limit. And then Dom said, I'd love to see a small fork targeting exclusively minor EIPs around blob count and call data costs like ASAP instead of likely 12 to 18 months along with big ticket upgrades. Not sure how realistic with all the coordination involved. And then I responded to him by saying, please include forced exits in that small fork if you do one. But this actually got really controversial for a bit. So we just covered Tony's responses. So Hani Abu replied by saying, this is pretty irresponsible initiative to try to push this without proper analysis. And then this was also echoed by Nixo. So Nixo says, without clear data on how this affects bandwidth for validators, this seems like a YOLO move that could make geographic centralization of validators worse. So the idea is that, in countries where the internet doesn't have 100% perfect uptime, those people, or bandwidth restrictions, they might not have gigabyte internet or whatever, those people will get punished more than people in the West, etc. So leading to more stake being online in the West. And then this actually got quite heated. I'm not going to cover the whole drama, but there's a lot of back and forth between Nixo and Eric about this. Anyway, Paradigm released a new research paper a couple of weeks ago that people are now being urged to read again. And this is about how to raise the gas limit. So they said lots of people want to raise the gas limit, but so far most of the discourse has lacked detailed quantitative evidence. That ends today we're making a scientific case for scaling Ethereum using ultra high resolution data. So they're just showing how the stake works and the state of Ethereum right now, what's happening, who's using gas, all that kind of stuff. And what it's good for and what it's not good for. And then they've got a whole little thing going along with that as well. This research is a couple of weeks old now, and they said that they're going to put together changes to this. It says we need data-driven answers to all these questions. And then they're going to, you should click around and find it all. And says that we're looking at stake growth, and then they said that we're going to, it says we have significantly more data shared in the coming weeks. If you're excited about researching Ethereum scaling, reach out to me or Georgios. We'd love to hear how you're thinking about the problem and potentially collaborate. And then finally, it seems like some people listened to Eric Connor and Nexon Cool here, Mariano, and one of them was our fellow Rocket Pool staker who changed their gas allowance. So the gas limit on their validator to from 30 million to 40 million. So this was a Rocket Pool node operator who did this. This is a Rocket Pool node operator just proposed with a 40 million gas limit, and then of course this got back to the trading, and Invis replied right away by saying that's not how it works. A vote to increase the gas limit, but it's not a 40 million gas limit block. And then there was a whole technical discussion that kind of went on about how you need more of the network to be able to do this, and this is not quite how it works. So I don't fully understand how it does work. So if you are curious about that, then go and follow the discussion below. But there's a lot of information in there from Invis and others kind of talking about how you can increase the gas limit. Finally, we covered the wall command yesterday, and that command now has been used 69 times, well more than that, but Invis also changed the name of it, saying disabled by LFO to save RPL. It's been called 69 times since it was removed, and yesterday the credit was given to Bossy, but that's been taken away now and given to LFO instead, which makes sense because LFO was the first person to actually suggest it. However, some people in the community were not happy about it being removed. And there was a discussion going on yesterday about was it removed because it was misleading, and people were kind of talking about it back and forth, saying it's been misleading since day one, but most people are aware of it only showing one Uniswap pools. And Fungible Yoakum says even if they know that it's misleading, it still has an outsized impact on vibes, which is very true. And Jagan here says that I'd argue the opposite. He says I loved seeing Wax smiling face in the graphic, now I don't get to see it, and that's pretty shit. And then I responded by saying that, first of all, if you miss seeing my face, then you can see the whack, the whack emoji. You can use that to do it. You can see my face. But then I responded, it's not about the ratio. The wall command is actually a lie. The majority of liquidity is now in USD terms, and it's on other pools. That command only showed one pool, so its output was kind of misinformation, especially one that was hurting the psyche of the community because many members didn't understand it. So I hadn't read Yoakum's posts above when I made that comment, and then I said, you can see my face whenever you want. And then the kind of Neverland Island, said, what are these pools? Are they on chain? What's going on? So I replied by showing the markets for the RPL token and how most of it is on centralized exchanges. So that's what CoinGecko shows on its market section for RPL. it says that Uniswap pool from the wall command only was showing 4% of total RPL volume that was happening. And then there was some discussions about how the liquidity was sorted and stuff. But yeah, the wall command is gone for now, and I think that's a good thing, because yeah, it wasn't leading to good things. But anyway, I think I covered a whole lot of stuff today. So thank you all for watching, listening, and being part of the Rocket Fuel community. Before I actually end, I put a little poll in Rocket Fuel channel today where I asked if the amount of coverage that I'm giving to, like, non-Rocket Pool specific things like Ethereum ETFs and BlackRock and all this kind of stuff. And even yesterday I talked about Solana meme coins. Like, if you feel like this is too much and the show just should focus on Rocket Pool stuff, please pop into the Rocket Fuel channel and give your thoughts. And yeah, I'd really like to hear what you're thinking. But it seems like most people think that, I've got the right balance. So let me know what you think. Am I covering things in the right kind of way with the right kind of balance? If not, I'd love to take your feedback on board. But on that note, I'm going to end today's episode. So thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you all have a lovely rest of your day, wherever you are in the world, and I will see you on Thursday. Bye.